Everyone, welcome back to LagFX channel. Today I wanted to make a quick video just on a trade I've taken on the US dollar to Japanese yen market. This is something sent out to the clients, something I analysed on the weekend and have been waiting for this move to actually happen. I want to explain to you why I was looking for this move in the first place, just run through some of the analysis that I did on this pair, and from there obviously I'll explain exactly how I entered, why I entered, and as you can see, how we've actually managed to gain a nice bit of profit so far. So this is live at the moment, as you can see. This trade was sent out 2 days ago. I'll throw the picture above, you can see the timestamp, the date. And at the moment we can see we are running in an 8-to-1. However, we do make use of partials and trailing stop losses, so it works out a bit differently, but I'll prove to you at the end and show you at the end the profits we've made and how that reverts still to a great RR. So straight away we'll bump up to the 12-hour. I just want to show everybody why I was even looking for a sell in this area. So first things first, we know that longer term, anybody who's watching the US dollar to yen market will know that we've had a massive rally recently. Crazy. Anybody that managed to get in on buys, you've been laughing this month because this bullish run has been insane. Anyway, sidetracked, let's get back to it. The reason I was looking for this is because we have some equal highs in here. As we know, when we have equal highs in the market, it introduces a concentrated area of liquidity. We know a lot of people are going to be having their stop losses here. They're thinking, right, if this is a resistance level, let's expect another tap. If so, we'll try and get in on a sell. And when I actually zoom in on this area, you'll see perfectly how the market makers, the smart money operators, have actually engineered the move perfectly to manipulate people out of the market. So a little interesting thing there. Make sure you check that bit out. I was looking for price to either tap into this supply zone with an unmitigated position left in the market. That was one of two things, or as we have done, come up to this level of liquidity, slightly break it, clear the people out of the market, and then we'll come down for hopefully what's going to be a retracement in the scheme of things, reacting to either this level here, mitigating a reaccumulation in the market, or actually coming further down to mitigate this area here where the bull run really started. So I'll move deeper into this area. We'll drop back down to a 2-hour. We can begin to zoom in, and I'll just run through now what I was talking about market manipulation. So this line of course represents those equal highs we've just been looking at the 12-hour. We can see how price perfectly traded up to, showed a reaction of this line, and actually if you see that candle afterwards, the sell candle, and we've had a high volume move down. Now anybody who's watching this, especially price action traders, they're going to be thinking, okay, a lot of selling pressure has been introduced, now's the time to get those shorts on. Where they're going to put the stop losses, likely back at this level again. And what this is doing is it's creating even more liquidity. Now, not only did we have 3 or 4 touches of this level prior, we've also brought another one in, signified a sell down, and then as we can see, we've actually blown through that. This is just a perfect example of a fake out, as people call it in technical trading, but what it actually is a schematic, so a distribution, just the presence of smart money operators actively getting people out of the market and then making their move happen. So I'll explain through now exactly why this has happened. I have 2 boxes here. You can see this larger grey one, and this is a distribution on a higher time frame, and then this blue box in here is actually a fractal distribution within the overall distribution. Now this happens all the time. We have the fractal nature of the markets, so price is delivering on a range of time frames. We're seeing fractal structure doing different things, but everything that's happening in this fractal structure is actually just fulfilling our higher time frame structure. So I'll just make an example of this here. We can argue that the move in here, so phase A of our larger distribution, is a reaccumulation, you know, for price to consolidate, move higher, a reaccumulation. The parameters are quite simply, we move into a range, consolidate, move higher, that's a reaccumulation. We move into a range, consolidate, move lower, that's a distribution. If we move down to a region, consolidate, move lower, it's a redistribution. If we move down to a region, consolidate, move up, that's an accumulation. So there's no key things that we're looking out for. We just know that if price comes, it stops, consolidates, there's presence of smart money operators, and we're likely creating a schematic. So anytime you see consolidation, just watch out for this. But before I get too sidetracked, I'll actually run through this a bit further. So yeah, as soon as this consolidation happened, bearing in mind we are watching this level around here for sells. When this consolidation happens, not only does it tell us a schematic is forming, but it also tells us that after a heavy bull run, there is some supply entering the market. Now, this is telling us that demand may be starting to get exhausted. I mean, that is pretty obvious considering the nature of this move. It cannot keep doing this for a long time. It's inefficient structure, and the market just cannot hold that. So after seeing this, I'm expecting, okay, my analysis could be right here. We'll see how it reacts when it gets to this level. And the main thing I actually focused on, I wasn't looking at this larger distribution because it wasn't obvious that that's what it was until around this area when we had the entry. The main thing I was looking at was this fractal distribution in the blue box. After I said, seeing that fake touch of our resistance line, seeing that manipulation of price moving higher, clearing the people out of the market, and just to even prove to you further how these guys control the market, we can see that after the break, after the clearance of liquidity, the fake out, whatever you know it as, we've actually retested a level here. You know, anybody who is technical is probably looking at this and saying, you know what, you're right, this is a perfect support line. And what have we done after manipulating the people out? We've tapped straight onto that level and signified a continuation higher. So not only has this move caught out those early sellers, it's also catching out aggressive buyers, because once people see this reversal, they're thinking, right, we'll get in on our long positions. What does it do? Absolutely sell through there again, and we start breaking down. So the most important thing that we're seeing here is actually this breaker structure. POS, breaker structure. And what that's telling us is that bearish structure is likely to continue from now on. It's also telling me that this point here, this up thrust, this clearance of liquidity, is the extreme high in the market. We're expecting this to be held, and we can start now looking for supply zones to sell from. So we've had that breaker structure. As you can see here, we've actually had another area of equal highs, and what did I say? That's liquidity build up. We're likely going to clear that before I move lower. So typically I would have thought, where's the next lower high in the market? It's right here. Let's get a supply zone from here. But because we have things going against that, so a market inefficiency and equal highs, I've thought, right, we'll scrap that idea. We'll look for a supply zone just above, which we've managed to find here. That nice buy before sell. So we've had that highlighted. I had an alert set just below. And from here, all I've done is wait. I simply just wait until I get a notification on my laptop or on my phone. And when I did, of course, that's when price is approaching this level, and I begin dropping down those time frames just to see how the more fractal structure is delivering. Is it showing that we're likely to reverse? And when we go down, I will show you exactly what I saw. So we'll just replay so we can zoom in on that. And of course, as any entry confirmation, I will drop even lower on the time frames, typically a 1 minute to a 15-second. Now the main thing I'm seeing here is this area right here. The reason that I'm interested here is because after we've had a nice high voluminous move, something's happened in the market. So we can tell that supply has been introduced just by the wicks, the small volume of these candles. And at this point I'm thinking, right, well, we're likely to reverse. Just looking at price action, pure candlestick formation, we shouldn't be able to continue higher. But straight after, we've seen a high volume move up. So what's this telling me? Right, the smart money operators are coming in control of the market now. This is the time to be watching it. We've had that tap. So as soon as we've tapped into this, this is where a sell becomes slightly more valid, because we've had that mitigation now. If we actually look at this region, I'll just circle it so you know exactly what I'm talking about. Go down to a 15-second now. Anybody who knows Wyckoff, anybody who knows distributions, will see in here that we've had just that, the creation of liquidity. We've had some resistance introduced, and then a large volume push up clears it all, and then we've started breaking. We've broken through the trading range, carried on, started putting in bearish structure. So now at this point, to me, a sell is pretty much confirmed. We just have to find the right entry point. So I've thought I'm going to take the assumption that we're going to have price come back up to somewhere in this area. Reason being, we have an unmitigated position here and also within here. So I know how horrible this box looks at the moment, but you just have to understand the way that the market flows. You don't have to get the most precise entry or find the most precise point of reversal. Just highlight a range where you know that a sell is most likely to come from. So after watching price break down, we've then had a big move up, come tap into this zone, do exactly that. Again, the other point we were talking about of liquidity clearance. Again, we've got some equal highs. What has this move up done? It's cleared them highs again, cleared liquidity, this is another great confirmation tool. So after seeing that, I knew I wanted to get in on a sell. So because of spreads, I didn't actually manage to get in right at this point. It was actually 114.23. Of course, where's the stop loss placed? It's above the extreme high. I'm expecting this high to hold. If this breaks, I don't really want to be on the trade, and if anything, I'll just look for a re-entry rather than just being lenient with the trade and holding it in a loss. Now straight away, we've seen price continue breaking down, and once it was doing this, I knew that I'd got a great entry and that the sell was pretty much confirmed. So I'll turn off the replay mode. We'll go back to our 1 hour chart. I'll just give some reasoning now for the take profit. So my take profit is just the next real area that demand's likely to be introduced. So here, just a nice unmitigated position. Again, a high volume down move before the up move. Smart money presence. So I'll watch that one closely and likely pull out of the trade here. Of course, that's about 230 pips away. And I'm never just going to leave a trade running like that. I'm also going to make use of partial closes. You can see the main one here being this structural low that we put in place. I was thinking, right, we are expecting price to break this low, but we have to account for the fact that it may not, which is unlikely. But again, we just want to secure profits no matter what happens in the market, make sure we're actually coming away with something. So we took a partial here. I do still have a quarter of my position running, hoping to fulfill the rest of this trade, but because I've already taken 3/4 of my profits out, bearing in mind that this was still at a region of about a 6-1, so even taking off 3/4 of the position there, we're still looking at a 9% profit. If you're interested, there'll be a link, the first link in the bio, to get into the learning lounge, where we usually forward at least one trade a week for people. We want to give you as much value as we possibly can. Plenty of other educational content like fundamental news, so on and so forth. So this is the rundown of the US dollar to the Japanese yen. I hope you've enjoyed this video. Hope you've learned a thing or two. If so, look to implement it in your strategy. If you're a smart money trader, great. Even if you're a technical trader, just bear in mind the couple of things I've said about market manipulation and just watch out for that in future reference. So thank you for watching, and we'll see you in the next video.